Thank you very much, Baroness Stroud. So now it's time for the first panel. It's moderated by our great friend Ting Deng from Santander Bank. And Ting has got a long experience from technology banking with a particular focus on financial services and financial technology. So I'll leave it for Ting to introduce his panel. Thank you very much.
Thanks, Jonathan. Good morning, everybody. Thank you for joining us this morning. The first topic of the day and for this panel will be how mobile can address financial inclusion. I think in about a year and a half's time, I think the iPhone would be about a decade old, and yet I think the consensus is still that not enough has been done, and not enough progress has been done, especially in developed markets. For mobile to be an enabler of including those who are underbanked to be part of the banking fraternity. Some of the statistics we've seen, 6 million people in the UK have been rejected for bank accounts over the last 2 years. That's from research done by Pocket. And I think the cost of being unbanked is about £1,300 per year, according to the Financial Inclusion Commission. And there are 2 million people in the UK right now with adults with no bank accounts. So that's roughly a £2.5 billion market or loss to the economy that is happening right now. So today we have a great panel of people with us. We got Vincent Dufresne, CFO of Symbiotics. We got Sian Williams, who's head of national services at Toynbee Hall, who's also a commissioner on the Financial Inclusion Commission. We've got former MP Chris Pond, who is the chairman of the Financial Inclusion Commission. We've got James Allgrove, who is the new head of growth at Stripe, one of the hottest Silicon Valley startups who are engaging in payments here in the UK. And we got Scott Abrahams, who is the head of acceptance at Mastercard UK and Ireland. So I think perhaps the first topic we want to talk about is I've made a statement and hopefully it's slightly provocative. I think in the developed markets the sentiment is not enough progress has been done. But whereas in developing markets, things like M-Pesa has actually made some good strides in countries like Tanzania and Kenya. Is this sentiment correct, Chris Pond?
Well, thanks very much. And can I underline Baroness Stroud's thanks to Concentric and Pocket and to Bloomberg for organising today. As you've heard, I and Sian are here from the Financial Inclusion Commission, which was set up almost 2 years ago at the initiative of Mastercard, who have generously funded it since, but giving it great independence. But Sian and I were also members of a working group on debt, which produced those reports that Baroness Stroud mentioned from the Centre for Social Justice. What I should say is that while debt is an enormous problem which is facing individuals and families in this nation, as she mentioned, the 9 million almost in debt and the 13 million who are on the edges of finding themselves in debt, that is not the same necessarily as financial exclusion, nor is poverty the same as financial exclusion. And while financial exclusion is causing that poverty premium, which you mentioned, for families, it's also a huge loss of opportunity for financial services. So here we are sitting in what we are proud to call the hub of financial services in the city, but actually very large numbers of people, millions of people, are not able to access those services because, frankly, they do not match the way people lead their lives. So that's an opportunity missed. And what I would say is that engagement from the fintech sector with financial inclusion is not about CSR. It's about exploiting business opportunities.
Sian, from your work both in the Financial Inclusion Commission and also Toynbee Hall, I mean, what's your opinion? And is mobile doing what it says and what it promises?
There's definitely some areas where mobile's making some interesting inroads. And I think when you mention M-Pesa, what we know is that we've just seen the announcement in the last couple of days that M-Pesa is going to close down in South Africa. Yeah. And when you look at the reasons for that, the reason given is because mainstream financial services already have a significantly high enough penetration that M-Pesa isn't getting enough of a group, enough of a client base, therefore it's not cost effective, therefore let's cut it. And I think that's probably where we are in this country. Yeah. So it's very difficult for challengers, Pocket, many other challengers, to start for two reasons. One, because we have a very strongly established financial services industry in this country. Yeah. And secondly, because trying to find your market is very hard. People are spread out across the country, and it's quite difficult to reach because not necessarily looking at the same kind of marketing material that, that you might kind of find an easy way to spread across this country. Now, my kind of key point here, I think, is always start with the human. So you talked about the poverty premium of £1,300, and you talked about that loss to the economy. Well, that money is going to the economy, but it's going into the extra fees and charges that you pay for your washing machine or for your insurance or for getting your credit. The real loss there, actually, is to the family, to the person and their household who pay £1,300 extra a year for doing exactly the same things as the person who's got a bank account pays £1,300 less for. And what does that mean? That means fewer school trips. It means fewer opportunities to go to a museum or to learn a musical instrument or to get a job or to take a driving lesson. So it changes the quality of people's lives enormously. Now, where does mobile fit into that? Two things. Think about the full range of what people need. Don't just focus on what looks exciting and sexy. And secondly, understand that, and the Lloyd's Digital Index research will really bring that out later. And I think this is really important. Think of segmentations. There are people who are under 30 who are desperate for financial services, and mobile is the way to them. There are people who are 45 and over. They are desperate for financial services. Mobile is probably not the way to them.
So, Vincent, I mean, often I think, I hear people say that, mobile's made, people who have money and who use financial services easier and access to financial services. I mean, from your perspective, Symbiotics, is that what you're seeing?
Yes, thank you, Ting. I'm very happy to be here with you. Just to explain my background, Symbiotics is a debt provider. We are refinancing microfinance institutions in emerging and frontier markets. So I'm much more familiar with those markets than with the UK market, for example. And I must say I was surprised to hear the numbers that were just given. It's true, when we started now 12 years ago, even the internet connection was barely available in the countries we were active in. It was a challenge just to report counting data from one branch to the headquarters, for example. And so we saw over the past decade an amazing development of internet connection, mobile connection. Landline in most of the countries we're working on were not used, but directly there was a leapfrog to mobile connection. But at the same time, it's true that the digitalization of the financial services that are provided by microfinance institutions in those markets has not progressed as much as one may have think. Although it may help to reduce the cost, and in particular, just as the cost of providing services is important in the developed markets, it is even more important in emerging and frontier markets where the sum in question, the amount in question may be even lower or much lower than the amount we are speaking in developing countries. But the progress haven't been that good. Of course, M-Pesa is an incredible example of success, but it's true it hasn't been replicated in many countries, and for that reason, it's true that mobile banking or mobile access has been developed, not as much as we thought it would. Thank you.
I think the second topic we wanted to discuss is really, it is a massive issue, financial inclusion. mobile is the technology that has brought so much to our lives and developed so many new things over the last few years. How big do you think the opportunity is? I mean, some of the numbers that I've seen according to the World Bank, there are 2 billion people who are without a bank account, and their target is to add 1 billion extra sort of bank accounts to those who are unbanked over the next 5 years. Are we just not thinking enough, and we're not sort of seeing the big picture, and we're not developing the products for such a big market? Perhaps, James, I mean, from your point of view and from Stripe's point of view, I mean, how big do you think this market is?
Yeah, so I guess we come at this problem from a slightly different angle in that we don't work directly with consumers. We work with businesses to give them tools that they need to start and grow their businesses, whether that's taking payment online, incorporating, or expanding internationally. And so we really give them the tools they need to start those companies and to grow them, which is part of financial inclusion. I think starting a business is an important way of people being financially independent and self-sufficient. And then we also work with a lot of other fintech companies to allow them to build services on top of Stripe, whether that's lending or investing and saving, companies like Nutmeg, companies like iWalker, and then also companies like Kickstarter, which probably fits into this category as well. So we definitely think there's a big opportunity out there, both in terms of the entrepreneurship that exists in the world. And so we've launched a product called Stripe Atlas that allows companies to be incorporated. And that's really driven by the fact that we had a lot of users that would essentially, it seems kind of crazy, but quite flattering for us, but would fly. They would be based in South America or Africa or other countries that we don't support at the moment. And they would fly to somewhere in the US, in Europe, in order to incorporate their companies just so they could use our product. And so we thought this is a huge opportunity. There's a lot of untapped entrepreneurship out there that is restrained by kind of how local systems work. And really the promise of the internet is to allow anyone to transact with anyone else globally. And really there's a lot of kind of local barriers to that happening. And so we came up with this product, Stripe Atlas. Essentially you fill in a 15-minute form, and we will incorporate a legal entity for you, open a bank account for you, and open a Stripe account so that you can start trading online. And so really, I think one side of the opportunity is in accessing and allowing that entrepreneurial talent to flourish. And then I think on the other side, we're also very early on in terms of like what the internet can provide for us in terms of financial inclusion and bringing people online and allowing them to access more financial services, more services and goods in general. I mean, if you look at the statistics here, less than 5% of global consumer spending actually happens online. The other 95% is offline. And so, again, moving more of that online, we really feel will unlock not only a lot of opportunity for entrepreneurs and for businesses, but also improve people's lives in terms of their access to those products and services.
I mean, Scott, I mean, from Mastercard's perspective, I mean, 1 billion users more in the next 5 years, that surely is exciting.
Yeah, I mean, the numbers that I was given was 2.5 billion globally. We won't argue about that because I think there's a lot of numbers kicking around on this topic. At Mastercard, we take the challenges of financial exclusion really seriously. You know, one of our mantras at the company is to do well by doing good, and that's why we sponsor and continue to sponsor the Financial Inclusion Commission. I think from our perspective, there's a huge split between the developed world and the developing world in this regard, we would see. We see a lot of the great innovations in mobile in the developing world, in Nigeria, in Egypt, in Brazil. Although you can argue how developed Brazil is, but you know, from our perspective, I think when you look at the UK, and the reason we got involved with the Financial Inclusion Commission was that people, I suppose, don't see it as so much of an issue in this country and in other parts of the world. There's 70 million financially excluded people in the US, for instance. And so for us, I think the challenge is that a lot of the traditional players have seen mobile as a way of serving their existing consumer base rather than winning new business, if you like. I think what will change in the UK, and is beginning to change in the UK, is we see a lot of innovation backed a lot of the time by prepaid companies, where they're using digital as a channel to serve people that are excluded in some way. We're also starting to see new digital-only challenger banks start to come into the mix as well, Atom, Mondo, etc., Tandem. So I think those two things in the UK will in the future have a potentially significant impact. But there's a huge area where I think we still, and the Baroness mentioned it at the start, around universal credit. We've been working closely with the government on ways of using universal credit as a way to encourage payment, which we know is one of the main routes to become financially included. And we still have a long way to go there, I would say.
I think that probably brings us to the next topic, which is what are the sort of big obstacles? Because as Vincent mentioned earlier, you know, the infrastructure is better now than when he started Symbiotics. The iPhone's been here, you know, 8.5 years. NFC infrastructure's, you know, there and it's proven to be secure and usable. Perhaps, you know, Vincent, you know, what are the obstacles preventing mobile from really driving sort of that mass adoption, both in developed and developing markets?
Probably it's a real partnership between public players and private players and public authorities, because one of the key factors for the success of M-Pesa was the strong support of the government, which decided not to rule too much or to regulate too much the emergence of mobile money. So this is how, without the support of the government, basically it's very difficult to launch a breakthrough solution. In particular for the domain I know about, the institutions we take care of are very small, so they are definitely not in a position to impose any system. So they have to work together amongst private institutions, but also with the public government to get the support and to launch a system that may be used across the whole country. And of course, much better would be, just as you mentioned, a cross-border transaction is another issue that has to be solved. Especially in our area, migrants send a lot of remittances to their domestic country. And of course, there are huge costs associated with those transfers. So this is where an improvement of improvement in the transfer solution could really help in lowering the cost, and in the end, bringing more and less costly services to the end clients.
I think, Chris, I think Vincent mentioned the word government. So I think, what do you think, from your perspective, having been in government, you know, what should a British government do to sort of bring these 2 million adults who don't have a bank account, a bank account?
Well, I think that the first role for government on this, as we've said in the Commission, is leadership. And there is a lack of leadership, unfortunately, from government at the moment to try to make sure that it sends a very clear message to the financial services sector that we do expect them to step up to the plate. Now, Sian, with her background in diplomatic service, has done a sterling job in bringing together the high street banks and the Treasury to come forward with an offering to make sure that people have an opportunity to access bank accounts. One of the difficulties, I know Sian will be the first to say this, is that you can deal with the supply side in many respects in financial exclusion. That has been done. Your problem remains on the demand side. That of those who don't have a bank account, actually half of them have had a bank account in the past and really don't want to repeat the experience. They found that as a result, by engaging with conventional financial services, they've ended up with unexpected overdraft charges or bounced direct debits, which have meant it's a really rather expensive product for them, and it doesn't really match the way that they lead their lives, as I said at the beginning. So a big challenge is not only about making sure the products are there, but also making sure that those products really reflect people's lives and people's needs, but also that people feel confident in engaging with those financial services. And on the mobile aspect of it, yes, it's the case that 93% of the population, the adult population, have a mobile. Not all of them want to use it for this purpose. There is still a great nervousness about doing financial transactions using a tablet or a phone. And we have got to overcome that lack of confidence, and we've also got to make sure that people can feel this is a really secure way of doing those transactions. And I'm afraid recent incidents have meant that many people don't feel secure in that respect.
You mentioned a good, interesting topic, security. Maybe if we go back to Scott, what's your perspective on how, whether it's providers or banks, how they can drive that sort of confidence into the users, especially those who haven't used their mobiles for financial services before?
Certainly, I think there's two things there. There's security and there's identification. They're linked, but they're slightly different. I think actually the need for identification is something that I think is a great angle to grow financial inclusion, particularly, again, in the developing world. I mean, we've got a pilot currently running with the Nigerian government where we're issuing an ID card backed with a Mastercard prepaid product. We're issuing 16,000 of them a day. We are looking and hope to launch very soon something similar in Egypt as well. So identification is something that we may not think, again, is such an issue in this country, but it sort of is. And just thinking about how many passwords you've got is hard enough. So the second thing around security and being able to confirm you are who you say you are is something that we're investing a huge amount of money at the moment in. And the exciting sort of area at the moment is around biometrics, right, and all the things. There's many people in this room that know a lot more about that than me, and it's a huge area for development when it comes to fintech. We also, I do think that, the internet has cropped up, and we're leveraging 40-year-old payment products to some extent into it. Even, I would admit that being from Mastercard, but we're catching up quickly. So we've just introduced selfie pay in 2 countries in the world where, it boots out and you take a picture of yourself and that's your identification. No passwords, no nothing. But I think you've got to offer as many different ways as people feel comfortable with for them to be able to confirm that they're who they say they are. And then, by doing that, you should feel more secure that people who are not who they say they are cannot access your details as well.
That's very interesting. I think you mentioned a couple of interesting and exciting things that will potentially enable mobile to sort of drive that adoption. From your perspective, James, I mean, what excites you in mobile and financial inclusion right now?
Yeah, I think that to your point of, I think this is a general issue, but one that we're working specifically on is around payments. Essentially, the payment system and infrastructure that we have was built for the offline world, and we're trying to we're working on it, but it was built for the offline world, and this applies to a lot of things, including identity verification, bank transfers, all these kind of things. They're all built around offline systems, and then they've been ported online, which makes sense not to necessarily start from scratch with everything, but it does mean that there are certain gaps in functionality, and especially when you get into mobile, where your phone screen isn't designed to type a 16-digit card number into. In fact, a 16-digit card number isn't even designed to be typed into anything. It should just go in. So there's a lot of things like that need fixing before we can really see mobile take off in the way that it has the potential to. And so I think one is building the technology. That's something that Stripe and Mastercard and a lot of other players in the industry are working on to fix some of those gaps. A good example for me is Apple Pay, where that takes away you ever having to enter your card details or on each individual app or website that you're purchasing on. So that removes a lot of the conversion issues that you traditionally have on mobile. And then it also solves the security point in that it introduces that biometric layer and makes the transaction more secure. So really, with that one piece of technology, it solved 2 problems around conversion and around identification. And so I think there's a lot further that we need to go in filling those gaps and building the technology to do so. so before we can really see mobile take off. I also think we have a lot to learn from more emerging markets and how they've done things, because they've also had to start from scratch with a lot of this infrastructure, and they haven't had to convert what they have for offline use into online use. And so there's a lot more that we can learn and integrate from there. For example, like there's lending products in emerging markets where the credit scoring is done based on your activity on your phone. That could be something interesting to incorporate into how we do KYC checks in the UK. Things like that, I think we should need to be a lot more open to investigating and integrating into our systems in order to really let mobile flourish in the way that we would like it to, and the way that has potential to.
I think we're going to start taking some questions. I see one that is far ahead of the others, 18 likes so far. And it's basically, what do you think the biggest challenge is involved in helping people to build up their financial resilience? Sian, would you like to take this one first?
So I think the biggest challenge in helping people build up their financial resilience is silo thinking. And that's silo thinking by the industry, by government, and by users themselves. So people's financial resilience is really made up of multiple factors. It's their income, their fixed expenditure costs, so housing, etc., fluctuating income, fluctuating costs, and then how that happens within the environment and the kind of whole life situation that they live in. So you heard Baroness Stroud talk about her washing machine going, or her boiler going, but if it were someone that we were talking about who's living in extreme poverty, it could be that that washing machine actually shrunk that school uniform, and now they've got kind of a major problem that their child can't go to school. So when you start to think about what financial resilience really means, it's very personal. And financial resilience requires income that you can be sure of, or if you can't be sure of your income, you need to be able to fluctuate your outgoings. And I think that kind of one of the key points that we've got in this country is that most payment systems, particularly for large ticket costs and recurring costs, are very fixed. You can't do much with them. And we know that many, many people incur charges because a direct debit went out that they just couldn't afford, because maybe their job seekers allowance was sanctioned because the bus broke down and they didn't make it on time, and those stories are true, or because someone got diagnosed with a serious illness, or they got the flu, or whatever. There's a whole range of reasons that change your income. So you need to be able to fluctuate your outgoings as well. Our financial services systems are not set up for that. It's one of the things I'm working on within the context of the Payment Strategy Forum. But as I've learned over the last kind of 6 months working with the industry, because we have such an established infrastructure in this country, it's like turning around an oil tanker. And so that's where I see not just mobile, but fintech, challenging kind of really big oil tankers, the banks, the big infrastructures, BACS, faster payments, the systems that really enable money to move from A to B. We need to redesign an awful lot of it because it's not nimble, it's not flexible, it isn't responding to the changing environments. And that isn't just about people who are currently living on benefits. If you look at the changing demographics of this country, the numbers of people on self-employment, zero-hour contracts who are blending payment or other kinds of income together with earned income, and that changes over time, we need to create a really flexible infrastructure. Those are the key planks of financial resilience. Then you add around that access to credit, insurance, savings. But until you've got those key messages right and those key infrastructures right around just balancing today's income and expenditure, then really that's not going to help anybody.
Okay. Thank you. I think the second question is something that we touched upon a little bit earlier, which is there are some countries that are far ahead of the UK, especially in developing markets, which is a little bit unusual. Perhaps Chris, through your travels and your work with the Financial Inclusion Commission, is the UK doing enough, and what can we learn from other countries to improve things?
Yeah, it's certainly the case that we're not doing enough, and we are, especially in the on the issue of mobile, as we all know in this room, partly because, as Sian has said, we're dealing with legacy technology, legacy systems, legacy mindsets. There is a tendency to make it rather difficult for the new entrants to be able to get a foothold. And that's both the foothold on both sides of the market. How do we actually get people to accept this sort of technology? Whereas actually, if there aren't high street banks and there aren't ATMs on every street corner, as in many countries, then mobile banking becomes a very attractive option. So we know that in much of Africa, this has moved ahead, though the disappointing news that Sian repeated this morning about what's happening with M-Pesa in South Africa. Nevertheless, it's well ahead of what's happening here. Our report, our chairman, Sir Sarah Cooper-Coles, went to China recently to talk about this report. It has been translated into Chinese, and there are copies available if anybody would like it. But in Chinese, but they have also now developed a financial inclusion strategy, which is not something we have at a national level in the UK. So, in many respects, we can look on the negative side and say we're falling behind. Let's be positive about this and say let's look at what is happening elsewhere and see the extent to which we can learn the lessons from what is happening in other countries and adapt it to the circumstances of people here. It won't always be appropriate. I mean, the old phrase that a colleague, Malcolm Wicks, once used about ideas being brought across from the States was that they would drift across the Atlantic soggy on arrival. And we've got to be careful about some of those soggy ideas. They won't always be appropriate for the way people lead their lives here. But let's see if we can pinch the best ideas that are out there, and there are lots of them.
And on that point, I would say there's a lot of scope for optimism there in the sense that the UK is a leader in a lot of these things. Spend per capita online and on mobile is highest here in the world, things like that. So there's a lot of appetite from consumers to consume in this way and to access services. I think the issue comes in that, as to your point of the way that we're thinking about providing these services isn't necessarily how people want to consume them. And so really it's a lot of we need to rethink how we do things from a provision point of view rather than necessarily say, oh, consumers don't want that, so we're not going to build it. I think there is huge appetite for that, but we're not really thinking about tapping into it in the right way.
I just want to come back quickly. I mentioned the Lloyd's research, and I know that will be picked up later, but there's one key point for me that that came out of that. So looking from the work I do at Toynbee Hall, really thinking about what's stopping people accessing services. And we always talk about there's the demand side and the supply side. And when we looked at the unbanked segment, we interviewed people who were unbanked. And when we talked to them, there was a really clear divide. And it was around age, more than anything I'd ever seen before in all of the research we do. When we asked people, why aren't you banking, and Chris alluded to this earlier, if you were older, so literally 40s and above, so my age and above, you'd had a bank account, it had treated you atrociously, it had caused you more grief and more fines and more debt than you ever wanted to see ever again, and you were still working your way out of it, and you weren't going to touch it with a barge pole, thank you very much. Or you were younger, and you were desperate for a bank account, and you were finding every single way to use online banking facilities possible to the extent that people had bank accounts in your name, or you had a card on someone else's account, or you gave your money to someone else to put in their bank account so that they could go online and make purchase for you. And my real concern is that we're not waking up to that kind of quickly enough, that there's a whole generation that we will lose, because what we also saw was that the older you got, the more entrenched you got into thinking that financial services weren't for you. And so, and I'm sure this isn't just in the UK, there's a population of 25 and under. We need to get to them now, before we lose them, before they lose belief and faith that this industry cares about them and their needs. And I'm not saying ignore people over that age. I'm simply saying, let's not waste another generational opportunity. Let's get to those people, find their needs, because they are reaching out. And what's stopping them? ID. If you look at the number of young refugees and also migrants who are coming to this country and cannot get access to services, and that traps them in unemployment, in an illegal economy, and honestly in poverty, and often at risk of living in poor housing, failing health, and we know all of that pushes people towards greater use of national services, but also often towards crime out of desperation. And I'm serious that what we saw in people's stories and what we're seeing coming through the refugee and the migrant community, those people are desperate. What's stopping them? ID. And your point, Scott, about using photos as ID. There's a fantastic project was running in Glasgow called Grand Central Savings, and that was for people who were homeless and unbanked. And how did they ID people? By their photo. You would walk into the branch, and you would give your name, your photo would come up, the person in the branch would look at you and look at your photo. If you weren't that person, you weren't getting the money, no matter what story you told. And only you had to come in alone. So really interesting use of photos.
Thanks, Jan. If we open up to the floor, sir, please.
I can't resist commenting on this. Joshua, one minute. Thank you. I'm CEO of Cybertonica. And in fact, I think I pitched to Scott at one point at Mastercard.
It went very well.
Yeah, I won't do that now. But what I think is very interesting, and I just want to reassure the honourable member that I'm not soggy. This is a British company. But I think what's very interesting is the ID issue and the credit issue are linked by authentication, which is what Cybertonica does using artificial intelligence. And the way you do that is you combine people's behaviors, their biometrics, and their payment history. Now, to have a payment history, someone who is not banked needs a card, like Pocket or others. And those cards receive money from various sources. And basically what we do is we control all of that upstream, so there's no friction for the user. Once you have that payment history, we can tell you in about 600 milliseconds whether this person, if they want to be personalized, because otherwise we're completely compliant with PSI DSS. If they want to be personalized in 600 milliseconds, you can give them a pretty good credit rating. That's what math does. So I think, although mobile is in our equation as well, I think it's not so much the mobile itself. And I would say, James, that not everyone can afford an iPhone. So I think, although Apple Pay is wonderful, what we do is we put Apple Pay in the reach of anybody who wants to create an Apple Pay space. And I think that's where we have to go. And although tankers are hard to turn, if you don't turn them, they go on the rocks, and that's a mess. And I'm thinking right now, it's a funny coincidence. There's a bank, I won't mention the name, but it commences by 2 labial consonants and works closely with Mastercard, who said to us, you would be a perfect supplier to us, British fintech company with world-class technology, except you'd have to qualify with Mastercard first for us to use you. So those kinds of things are actually going to lead the fintech community to find its own markets and its own solutions. And the real challenge is going to be for the incumbents to figure out what to do with all their data when they're sitting on top of it with no money. And I think that's a challenge that mobile can help to solve if you use it properly. But the authentication and ID, that's where it all starts.
Thank you. Does anybody else have a question from the floor? Okay. Great. Well, perhaps we've just about run out of time. Yeah. Okay. So there's 8 likes for our technology. Essentially, technology costs too high, and is that the problem? And if so, what can be done about it? Vincent, do you have a view on that?
Yes, I think that's starting this presentation, this panel, I said that the level of adoption was lower than expected, and it's probably because of the costs. So it's right, technology costs quite a lot. So and again, the institution we work with are small, so for them it can be a challenge to develop internally their own system to create gateways between mobile systems and their MIS. So yes, I think that technology is a risk. It's an opportunity, of course, but at the same time, it's a risk. It's a financial risk if you're not successful in what you try to achieve. And it's true that I'm aware of a case in Kenya where a new microfinance institution was launched with the idea of being fully digital, meaning relying on M-Pesa, going through the credit assessment process fully digital. But in the end, it didn't work because basically the costs were too high to offer a decent services.
We have another question. I think probably the last we take. Just does the major financial institutions see tech disruption and that helps financial inclusion as an opportunity or a threat? I think, Scott, you're probably perfectly placed.
Am I?
Yes,
Yeah,
to answer that question.
Yes, it sees it as both. I think the thing is that, you know, I mean, I've worked in a bank, I've worked at other payment institutions, I've worked at a big retailer for a long time as well. It's still a flavour of the month to some extent to criticise the major financial institutions in this country, and understandably and rightly so in many ways. What I would say in their defence is that they are under so much pressure from a compliance perspective, from a culture that constantly criticises them for everything and hammers them the second they make a mistake, that to some extent they are just stymied and frozen by that. They don't know what to do. And so you get to some extent into a bunker mentality when it comes to that, I would say. And you know, I sleep pretty well, but as a large company working in this space, the only thing that keeps me awake is that disruption. Am I speaking to the right people all the time? Do they know who Mastercard are? Are they doing something that's threatening my business? And I believe the banks, and we work with many of the banks in this country, including yours, Ting, you know, I think that there's a culture of fear and risk aversion more so than ever in those financial institutions, which I think to a large extent is understandable. It's very easy to criticize it, but it's also very understandable as a human being. And I think until we stop doing that to some extent, you know, we won't get the technology and the access that we deserve here and in many other parts of the developed world.
I agree.
Yeah.
I thought you would.
This is a consumer representative. You know, I hold financial services firms to account quite harshly at times. Lots of people have been on the receiving end of my normally quite private challenges. But working with the industry within the context of the Payment Strategy Forum, trying to build a new strategy, and just talking to people and hearing really kind of enforced schizophrenia, which is I really want to change things, but the regulator is such a difficult industry to work with. And I say the regulator is a difficult industry, and I mean that very seriously. You know, we don't really have a regulator infrastructure here that talks to each other. And when I suggested to the payment systems regulator that one of the key people they needed to talk to were the energy suppliers and the energy regulator, they were, why? And I said, well, because one of the key costs in this country for people are energy costs. And if you want to change something around payment systems that deliver better outcomes, not just for the individual consumer, but every business, then actually you need to get the energy teams on side and the energy providers on side, because they need to change their payment systems. And that's a huge business. So really understanding that you need to link that up. But this point about kind of regulatory penalty and regulatory fear, I feel it across the whole sector, and it is very difficult, and we need to get that right somehow. We're not there.
Okay. I think perhaps we finish off by getting all the panelists' view on you know, where do they see mobile money and financial services in the next, 10 years from now, when the iPhone will be nearly 20 years old? Maybe start with you, Vincent.
No, I'm confident that mobile banking and access to financial services through mobile will continue to grow. I don't know if it will, in 10 years from now, it will be a reality or not, but I think that cross-border transactions through new system would be a great solution, and would be something that would definitely disrupt the current situation and the future situation.
Sian?
So this is my ideal, rather than what might necessarily happen. Products will be designed primarily based on intelligence about real users. And investors and shareholders will be selected rather than simply allowed to invest on the basis of the world outcomes that they are trying to sponsor. And therefore, payments and the financial sector will be a net contributor to world peace. And I mean that quite seriously, because at the moment, financial systems, financial services are open to hijack from any investor who just wants a quick return and who wants to kind of get their money back. Let's change that. Let's start to become a really ethical industry that drives change for good and a longer and happier and more sustainable human global population.
I'm not sure I can follow world peace, but I think we should quit while we're winning, frankly. But no, I'm optimistic as well. In the discussion we had a few moments ago about whether or not the disruptors and mainstream can somehow work together, I'm optimistic that while at the moment there's a bit of a sort of battle on the fringes here, that both sides will recognise that by working together, they can come forward with products which really do meet the way people lead their lives, and therefore the market will increase. And I think over time, as we deal with some of these security and identity issues, we will see a new form of banking, very much based on mobile, but recognising that that's not going to be right for everyone.
James?
So as I said before, at the moment, less than 5% of consumer spending happens online. So I think inevitably in the future that's going to rise rapidly. We can argue over whether that's going to be 20%, 40%, 60%, 80%, but it's got to be a lot higher than 5%. And I think how quickly we get there is really down to whether we're building the right technology to solve some of those gaps around identity verification, around giving consumers what they need in order to access the services in the way that they want to. And so, yeah, I think to your point, it's down to how we all work together to solve those problems together, because if we all develop our own solutions, then it's going to be a mess, and we're not going to get there as quickly. So that's kind of my vision on the future.
Scott, the last word.
Thank you. Not used to that at Mastercard. Well, maybe we are. Well, we also vote for world peace. Number one, we're very much up on that. I think for me, being a little bit more colloquial about things, what I would love to see, I see so much talent, energy, diversity, entrepreneurship in this city. I hope by solving some of the challenges that, Sean, you've spoken about, that we can actually turn some of that attention to solving some of the challenges in this country, as much as seeing the developing world as an opportunity for that entrepreneurship. You know, a lot of businesses come to London because they get that diversity and they get that talent and they get investment and money. But then quite often they turn those products towards other parts of the world where they can perhaps implement them quicker and get a faster return. And I'd love to see that just change 1 or 2% in the future.
Well, thank you, everybody. And, enjoy the rest of your day.
Thank you very much.